All right, we got US dollar falling and or the Dixie, and US dollar Japan falling, giving a nice little rise to the S&P. Housing numbers today, or pending home sales, is the only econ on deck at the moment. Remember to look around. You can often find that there's a lot more econ out there, from grain shipments to FX swaps, all kinds of things that don't necessarily gravitate to the top. Still expecting to see some shenanigans out of the FX market. And one thing that kind of got my attention is that Japan is set to import the first crude shipment from Russia since May. There's a lot going on over in Japan right now, a changing of the guard that's going to happen in the next year or two, and things are going to change drastically. Looking at their 10-year, the bond market over there is expecting some significant volatility. Right now, they are importing. They're about to begin importing this ban cost, right? They import inflation. They import, think about anything that's attached to energy. So it should be pretty interesting. If we see some craziness in the next few days, I think it's most likely to start or originate at Japan. That's my go-to at the moment. Watching US dollar Japan closer than anything else. And this move that we're getting in the ES, I started a little slow this morning because I was getting my entry on that breakout. We lined up really nice with that US dollar Japan right as the morning briefing was starting. So there's the breakdown that got my attention. Starting to get a little follow through with the dollar. The VIX hasn't responded at all yet, which means until we see that, we're very likely not going to make it into a new Globex high on the morning. But, we could certainly get up to that 68 or 69 area. We shall see, huh? So good morning. Good morning. Additional auctions today, 11:30 and 1 o'clock. So after 1 o'clock, you should be good to go for your 0-day play. Volume's a little light, but considering it's the holidays and looking at where we were yesterday, it seems to be right around that same area, right? 50s, 60s, 70s, holiday volume. All right, we got a very narrow IB and a really narrow Globex. Kind of implies that there has not been a lot of work done yet. We're still inside the RTH, which means we're obviously still inside of yesterday's trading range, but you can break these down into zones since we're, kind of moving around in a muted environment. Breaking all of these down into different quadrants helps out a lot. This reversal yesterday was signaled perfectly with a break in the dollar. Happened to catch that in the SPX. I know recently I talked about how the dollar wasn't really helping out much, but it was more of US dollar Japan tied with just watching the Dixie, the DXY, that kind of gave that heads up. Pretty sure I took a picture of that. All right, so there's the SPX reversal yesterday. And it was the dollar breaking through the 200 MA, US dollar, Japan, testing those lows. And of course, both of these expanded lower, but it was on that breakdown of this price shelf right there. For the catalyst on the trade to the upside in the SPX. It was about a 10-minute trade, and that options rate of change moved over $1,000. I didn't catch 1,000 though. I only got 830, but it doesn't take much movement in the S&P on those SPX options. All right, so we had a move in the kill zone between 2 and 4. The market has just now came back up and reset that move from the kill zone. Consider it a little bit of a gap close, right? I know it doesn't seem like a gap because you see candles there, but it's like a liquidity vacuum, a liquidity gap. So it's come back up, it's reset the gap, it's done, which means we're right back where we started. We imagine it as if it hadn't happened at all, right? Back it up to right there. That's how you want to begin your analysis, because all the market has done since that move down is reset it. So whatever we were doing before that move happened is very likely going to be what we're going to continue to do. There's a lot of bullish flow this morning. We might start to see a little bit of, I don't really want to say a short covering rally, because that implies we're going to be looking back at, Nokia, BBY, and all of those heavily shorted names. And I think those are just about done being covered in their rally. ADR today. The ADR half will put us right up to the high of yesterday. It's not perfect, but really close. 3,900 is still the benchmark. It's still a line in the sand. Significant. I don't want, doesn't really fit to call it a call wall, but we'll just say, a lot of options resistance sitting up there, 3,900. And at 3,800 on the other side would have us re-engaging with Thursday's low. So ADR half, the high of yesterday, previous week's high, and then the ADR full at 39, call it 39.40 for some easy numbers. To the downside, the ADR half would take us all the way outside of Friday's price, and we'd be back to looking at Thursday again. And the ADR full would actually get us breaking below Thursday. Now, keep in mind, guys, the market doesn't owe us anything, right? Well, it doesn't owe us a Santa Claus rally. It doesn't owe us a crash and burn. It's not an either or. We could just stay here all the way into the new year. Having said that, though, I think that just one catalyst is all it would take to send this market in one direction or another. the upside catalysts that I have continued to focus on is Russia, Ukraine. If they even imply that the Russia, Ukraine situation could be de-escalating, that would be a magnificent boost to the upside in the market. And the other side of that would be if China completely abandons the COVID zero, and they're unwinding it pretty well. I mean, they're backing away from that stance. Every day we're seeing them back away more and more, but they didn't do it all at once, which would have been a significant catalyst to the upside. But right now we're still range bound, and I'm seeing a lot of people, throwing options out there on directional trades, thinking that we're going to go somewhere, but there's no direction yet. If we're still sitting inside of the previous candle, then we haven't gone anywhere. You can go long from here, you could go short from here, but it's a coin toss. There's no edge in trying to determine which direction we're going to go yet. I'm really considering putting on a neutral trade, just on the idea that we really might not go anywhere at all. If we do go anywhere, the benchmark is going to be Thursday's price action. A break above Thursday's price very likely is going to have us target 4,000, perhaps even 40.50. And a break below Thursday's low would be a quick shot to 3,700 and perhaps even 36.50. That is a very large box. So all you got to do is let this market tell you which direction it wants to go, or grab some of that really, really far out option for cheap, right? Get some lottery ticket stuff. That way, if it does lose, it's 2 or 3 pennies, 5 or 7 pennies, whatever. You can't even get coffee for that anymore, right? Throw $10 at it, 10 pennies, and see what happens. $10-day, 30-minute volume profile with TPO. We continue to hold right at that point of control like a gravity, like a magnet. We've built up more volume here than anywhere else. Over the next 24 hours, we're going to lose more of this higher volume around that 40, 50 area. We had talked yesterday about breaking above Thursday's high and how we would move in through a shallow area. Shallow areas, we can move through those really quick. Well, that shallow area still exists. So if we were to break above Thursday's high of last week, then, for the rest of the week, a move to the upside should be pretty fast. Just a rip right on up into that 40, 50 area. But we're going to lose this volume that's up here over the next 2 days. At which point, if we're still sitting inside of last Thursday's price action, we're going to have a very narrow 10-day volume profile. It'll basically line up with the TPO value area high and value area low. All right, the VPOC did its job. First touch had a slight pullback, wasn't very much of anything, and then it gave it up, and that was a wrap. So it didn't really offer much. We took it out pretty quick. So we're done with that one. We don't need to carry forward yesterday's because we've already crossed through that zone multiple times. So if we were to make a downside move today, 37.88 has a VPOC. And I believe there's one overhead, but it's so far away. Yeah, 40.76. And we've been talking about 40.50. So, if we were to get above 40.50, 40.76 would be the shutdown point. $36.50 is 5.68% from the close. And 40.50 is 5% from the close. Now remember, half the trading day is already done, right? So we would be talking about making nearly a 5% move in the next 8 hours. It would be significant, right? It wouldn't be subtle. It's not going to sneak up on you. It would be a magnified version of Thursday in whatever direction. We have a 2% ADR right now. Pushing into an extreme, I think 3% is more realistic than 5%. It's 39.75 to the upside. And 37.40 to the downside. Continue to keep your eye on US dollar Japan and the Dixie combined. You'll see movements in US dollar Japan that don't reflect in the dollar at all. Seen that a little bit ago. That was the tell for this breakout that I caught into as we tangled up with those EMAs. The US dollar Japan started moving first. Dollar lagged behind considerably before it finally started to move. And then the S&P made that nice little expansion. I mean, it's pre-market, didn't get a massive move out of it, but enough. But notice that the VIX still isn't responding yet. We're very likely not going to see the VIX respond until we get above at least the Globex high of yesterday. Or at least above the Globex high and into yesterday's RTH high. So if we get up into that, then it's likely to see the VIX break down. On the other hand, if we tangle up into that 38.70 area, fail to break out like we did yesterday, and begin moving back down, could very well continue to see the VIX not do much of anything. We won't be able to say, well, if we break down from here, that the VIX should rise up to the levels it went to yesterday, because it's already happened once. The more times it happens, the less the VIX is going to respond to it. Right. So retesting 38.50, maybe even 38.40, and we likely won't see the VIX significantly accelerate above that 22, maybe 22.25. Right. We would need to break down below 38.40 and really begin expanding lower than that before we start to test, say, $23 in the VIX. Notice US dollar China is not participating in this sell-off. I don't like it. So I'm going to stick to my thesis that says if we start to break out above or below and things begin to get wild, it's very likely going to come from the FX marketplace. Japan is the first suspect on the list, but China is a very, very close second. So I would watch those two markets really close. Tesla got a little bit of a pop this morning. It's got a market maker move of 3.7. It's got an average daily range of over 8.5. Now, I was talking yesterday about this thing. This has been the clearest picture of a consistent market message that we've seen in a long time. I mean, this is an absolutely beautiful, breathtaking move to the downside. And everybody at some point has been discussing the idea that it's very likely to bounce. And it just doesn't bounce. It just keeps falling lower and lower. It broke structural yearly levels already in the last few days. And it didn't bounce there either. It just kept on going. So in technical analysis, we know that mean reversion, even a little bit of mean reversion, is a very real threat. It should pop up at some point because that's what markets do, right? They just don't move in a straight line continuously forever. There's going to be a pullback, but it's likely only just a pullback. This has now been lumped in to some of the greatest loss of stature names like Yahoo. Back in the day, Yahoo was the darling. Everybody loved it. Everybody was in it. It was one of those that was just shined on by media, always talked great. And then the decline started. Well, there is no Yahoo stock now. You can go hunting for the ticker symbol, but it's gone. Doesn't exist. This thing is way past its multiples, but it had that shine on it. Media loved it. Investors loved it. Retail loved it. Everybody loved it. They've got iconic traders who do nothing more than just trade Tesla. At least they were doing that until it did that stock split. But it's lost that luster, and down we go. And it's not done yet. One thing I try to stress is that when you have a market going parabolic or doing something that's not normal, technical analysis doesn't work. The whole idea behind technical analysis is that we look at what has happened in the past and we make suppositions for what we think is going to happen in the future. But it's all based on what we've seen before. It's based on logical price action and logical decision making. When markets go parabolic, up or down, it's not acting rationally. It's not logical. Technical analysis doesn't apply. So we can't really measure how far it's going to fall before it bounces. And when the bounce comes, there's no telling how high it's going to bounce. So keep that in mind when you're trying to perform analysis on a market that is acting crazy, because your technical analysis isn't going to be very effective. So we did get a little bit of a pop. I say a little bit, but that was a 10% move in an hour, almost 11%. This is very likely just a dead cat bounce, a little bit of a bump to the upside into a resistance zone before rolling over and continuing to go lower. I've seen a few people talking about loading the boat somewhere around $80 and buying into this as if it was a good company to own, if they could just get in around that cheap value. Hey, it's your money. You know, you want to do what you do, you. I'm going to stick to the idea that this thing is cooked and that getting it at a lower price to load the boat and have a portfolio full of this to give to your grandkids someday is probably not a good idea. How'd that work for Ford and GM? Natural gas down again 4% this morning. It's the leader of the pack. Gold miners and gold also down this morning. Emerging markets basically flat. With US dollar Japan falling as significantly as it is, it's a little bit of a shock to see gold down like it is. Got a nice little rising wedge here. Well, no, I guess it's more of a channel. There was an article on, I think it was Bloomberg, but it might have been Seeking Alpha, that was talking about the shift coming in gold and how precious metals, it might be the year for precious metals in 2023. I think if you look around, you're probably going to find a lot of articles like that. I'm sure they said it in 2022. They said it in 2021, right? It's the gold bugs say it every year. This is going to be the year. Yeah. All right. Well, for the quarter, we've got that reversal and we're not closed out on it, right? Really close. So let's start with that. Let's close above the previous quarter's candle and start, that shift above 170 and just run it level by level, just like we do, everything else. Why this market is so flat this morning? Nothing's really hitting the benchmark except biotech. And that's just a kind of close. All right, so tech and finance, this ought to help out this morning too, since it seems to be the divide right now. So here in the middle, this is NY Fang. I refer to it as tech a lot, but technically it's not tech, right? It's more of like a mega market cap name. So it's an index. I basically treat it like an ETF. It's a basket of names, right? Microsoft, Apple, Meta, Tesla. It had Twitter in there, Netflix, Baidu, Baba. Really clear, really clean price action, a break below the 5, or in this case, maybe a 2. Yeah, a break below the 5, Busby off the bottom, and then down we went, matching that low of the day. And right at the end of the day, just a little bit extra. But really clear, really clean, consistent, persistent selling in tech, basically, or in the mega market caps. The last of the big bubbles that popped, right? But on the other hand, finance had that big sell-off at the front, got back above VWAP, kept testing that high a day, and we went into the close more closer to where we started the day than closer to the low of the day. All right, so finance compared to big tech, big difference yesterday. This is that difference that we continue to see. And if these two sync up again, if we quit looking at tech versus finance and instead we start looking at tech and finance, that's when we're really going to start to see this market move up or down, right? So if these two sync to the downside, it's game on. We're going to break the lows and get out of Thursday's price and start really dropping. And the same thing the other way around. If we can get that move back up and they start both moving together to the upside, then we're going to get that break above Thursday's high and continuation. We saw a little taste of it yesterday when both of these bottomed and rallied right around 10 o'clock. We had that green line breakaway in the cumulative tick. You can see the market breadth significantly changed in the S&P. In the NASDAQ, I mean, it tried, but it just really kind of fizzled out. We pegged out in the ticks, and we had the weighted AD run up through the 0 line. And then, of course, it all stalled out again. But just that little bit when they were both working together, both moving in the same direction. We had a real quick, fast move in the market. So that's what we want to focus on. US dollar Japan, the Dixie, the DXY, NY Fang, KRE. The rest of these, the market breadth, the AD, advanced decline, they're not going to function as well with the lower volume, especially the tick and the C tick, and they're just not going to function as well. But price is still price. So, you know, the NY Fang and KRE, those are names, those are price. They're not mathematical formulas. So they should give you a really clear indication of conviction or trust or confluence when we start to get a move, if we get out of Thursday's price action. Because remember, it doesn't owe us a move out of Thursday's price. Another thing to note when it comes to this sort of analysis is that we're holding against the high here. Right? This is Thursday's price that I marked off. We're continuing to hold in the higher end of that price. A market's natural state is to go up. The longer that we hold at a level like this, the more likely it is that we're actually going to go up. So we want to look for signals that that's starting to unravel, because every analyst out there knows the longer we stay here, the more likely it is that we go up. So if it starts to go to the downside, they're going to begin cut and bait, and there's not much left to cut, right? It's so close to the end of the year. It's hard to imagine that if they have something that they want to get rid of, that they haven't already gotten rid of it, which is why we're not seeing a really big sell-off. But on the other hand, who wants to buy now, right? They want to wait until we get into the new year, which is why we're not getting that really big rally. So the argument for a neutral trade going into the end of the year, it's not a bad argument to make. That trade that I got yesterday was basically these two candles and I was out 10 minutes. So we don't need a massive move to trade, you know, in the SPX options. All right, where the ES is sitting right now, the S&P is going to open, the SPX is still going to open inside of yesterday's price, but not by much. If we move a little bit farther in the ES futures, we're going to open outside of yesterday's price. It'll be an inside day breakout gapped up. So you're going to want to focus on staying out of the box. If we open above it, it needs to stay outside of it. If we do break inside of it, start to fade back down, yesterday's close is going to be the target. If we open and we're still inside of yesterday's price, getting outside of yesterday's price is going to be the number one thing. Once we get out of it, we target Thursday's high, 38.53. And then we'll continue to move from there, 38.70, and then the ADR, 38.75. The close from Wednesday, 38.80. Wednesday's high, 38.90, and then 39.06. So levels all the way up. At this point, we're not seeing a downside play coming in unless we start to see a reversal in US dollar Japan. This sell-off here fueled this move up off of the low. So if we start to rally back up and we get above 133, then we're very likely going to double top here and retest. It's working on it too. Notice how the bearish argument is getting pushed back more. The US dollar China breaking out. Well, it's been working on that for 3 hours. It finally got it. Yeah, this reminds me. All right, bonds is the other issue. So we had this really nice weekly run, multiple, but the 5-week rule or the 5-bar rule actually came back into play. This was supposed to catch support at around that 104 area, and it did not. Classic reversal pattern. Kiss of death, gap down. Haramni bar. Now this setup, this topping pattern with the gap down on a weekly, and then now another one, 2 in a row. That does not bode well. It kind of shuts the entire we're going to rally in bonds thing down completely. And back to 93, 94, 95, it's not going to be much of a surprise. Here's an example of that in Meta. Topping pattern, gap down, gap down, gap down, 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 down. Same thing again. And again, right? You start to get the idea that the picture in bonds, that's bad. So it could turn around. Price can do whatever it wants. But this is one of the cleanest examples of an evening star, although, I mean, you know, it doesn't exactly fit the bill for an evening star, but for a reversal pattern with that gap and no wick on either side, and then another strong gap, and so far just a very small wick. That is a very, very bearish setup. So TLT to the downside, 95 would be a good target. And this throws the whole argument into question that 2023 is supposed to be the year of the bond and the 60-40 comeback. Maybe in the later part, but it's going to take a few weeks to retest these lows and perhaps base and try to make another run. So we'll have to see. And on the other side of that, TNX. Now, to help with this visual, you can put a minus sign in there. Flip the whole thing over. Same setup. All right, I'll leave you guys with this. On the S&P, we didn't really get anywhere yesterday, right? It was just an inside day sitting inside of Friday's price. Look at the NASDAQ. We managed to get outside of yesterday's price and close below it. So now this morning, you know, we're getting that rally back up a little bit. So we've got a red to green going on with the NASDAQ, you know, setting to open somewhere right around in there. Watch these pivot points really close. They're going to be the key to everything. As we come into these pivot points, the open, high, low, close, you got US dollar Japan, the Dixie, US dollar China. Keep your eye on the bonds. I know it may seem like a lot. You don't have to stare at them constantly. Just refer back to them and see if they're getting near a pivot point. Right? Because if they're kind of floating around in the middle of nowhere, then you definitely don't need to stare at them nonstop. It'll just become a lot more important when any of those get near a pivot point. especially at the same time that the S&P or the NASDAQ is coming into a support or resistance area. Everybody be safe, be careful, have a good day. I'll see you all tomorrow.